Happy Friday, Gav. How you going?
Yeah, good. Always good on a Friday. I see the sun shining behind you. It's not quite like that down here.
Yeah, heard it been pretty cold for you guys, but yeah, nice and sunny up here on the coast.
Yeah, I can't complain too much. It is winter.
Yeah, absolutely. Mate, another interesting week in the market. We sort of broke that 86 level. We've had a little look at it this morning. We're just sitting under it at the moment, but some great moves in resource stocks today.
Incredible moves. I think some positive sentiment out of China and a meeting next week and another Chinese stimulus potentially the week after. It's got them excited.
Definitely is. Yeah, nice to see. Certainly Fortescue, pretty widely held stock for us. BHP and Rio really getting some good moves today. So,
Yeah.
mate, let's get into our ideas for the week. The first one that I put together was in AGL. Look, at the stock's trading around $9.75. Target in the market's about $11.70, so pretty positive target. So looking at a buy right, and the reason we're looking at a buy right, there is a pretty attractive dividend to come out very early September. So we looked at the idea of buying the stock now, writing a call, and maybe waiting to write that call for a little bit of upside in the stock, but certainly writing the call when we do get some upside, and writing a European call. Now, the reason we've suggested European is we don't want to be exercised until September because we want to get the dividend along the way. But if we work the example through as you've got the numbers there, it looks like a pretty attractive result, especially if we do get exercised up at 10.26 end of September.
Yeah, I mean, almost 10% for a couple of months trade. Very, very attractive. But the other side of it, it's a stock you want to own. So you like doing these sort of trades when it's a stock you're happy to own for the longer term anyway. If you get exercised, you hit your profit target in a couple of months. Otherwise, you're quite happy to hold it anyway.
It looked very true. And yeah, yield wise, I think it's just under 6% yield it's sitting at the moment. Yeah, that good dividend to come out early September. And if you didn't get exercise in September, you could always look at writing October calls and keep that income sort of coming in, selling covered calls, and knowing you're going to get a good yield out of the stock by holding it. But I do think there's some good upside, especially with the research targets that we've got at the moment.
For sure. I'm going to give you an example a bit later on of a client that's been continually rolling sold calls and what it's meant for them, but as an example of what you can do if you don't get exercised.
Fantastic. Right, mate. Now you had a bit of a summary on market performance and options volumes of late.
Yeah, so at the end of every month, we get all the ASX data and put together a monthly options report, and that's up on our
Yep.
website. You can look at it under the research tab, and it just gives a summary of what the volumes have been traded and also how the market's positioned for the month ahead. So, at the 11th of June now, so this was as of at the end of and what are we? It's 11th of July, so this is at the end of June, but you can see the number of XGO puts that were bought as downside protection was a very high number. So yeah, at the time, the market thought, you can read that as the market thought that the rest of the market was a little bit high, so they bought some downside protection. With BHP and Fortescue at the time, you could see the market was selling calls as a way of bringing in extra income and buying some puts, which is a little bit of a bearish sentiment, but
Yep.
so you could see that turn around very quickly after the last couple of days in those two stocks. CBA was an interesting one because you had a lot of bought puts, but some people were buying calls in it when it was at its record high. So the only thing I could think of there was potentially there was some short covering going on that would explain that. And then Santos, of course, there was a takeover offer, and with so much uncertainty around it, you can see a lot of people decided to buy puts on the downside, and given it opened up high after the announcement, and there could still be a dollar. I think there's a bit of a hedging, a bit of betting both ways on that one. So that's just the five highest traded stocks by volume on the ASX with the options market. So it's pretty interesting sort of read to give you a feel for what's happening, what the rest of the market's doing.
Yeah, mate. Interesting data there for sure. Okay, so now you were going to mention something regarding some covered calls and a bit of a case study you've been looking at.
Yeah, so September last year, we had a couple of clients that were looking at buying Fortescue for the same sort of reasons, happy to hold it. We did a buy right initially to start with, so it was $80,000 invested to start with. They bought 5,000 shares, which gives them access to 50 options contract. So every month since then, we've been able to, I'll just show it on the screen here, they bought it around here. So every month since then, we've been able to either roll the calls for a profit. We did a repair trade in the middle of it, and with a couple of dividends, and what are we up to 9 months odd later? They've
Yep.
now received about $27,000 on top of their initial $80,000 from where they started with. They still own the stock. It's had a good rise in the next couple of days. We'll be looking to sell calls again this month. We It's been a fantastic trade for these clients just to show how much additional income you can bring in selling calls against one stock. So with an $80,000 exposure, this has been a great trade for them.
Yeah, fantastic, and it is good to see how that numbers really grosses up with when you are getting good premiums and getting a stock with a solid dividend flow.
Yeah, no, this was a really good trade, and it looks like we'll go for a little bit longer yet. We did set a profit target of around $19, so we keep rolling and rolling, occasionally rolling the strikes up a little as well. But
Yep,
whatever you're bringing in that income, there's no rush to sell it.
fantastic, mate. Excellent. Now, I think we're going to also talk about the recent trading idea we had in James Hardie. You had the chart up there.
Yeah,
So
that's it.
it's been an interesting stock. Had a really sort of solid fall earlier in the year and has been sort of making its way back up. I like James Hardie because I sort of looked at the building sector with some of the policies that have been launched by the federal government to try and encourage new home building and everything. James Hardie is probably our most direct major sort of building stock. So I really felt it was a good one to play. Very solid research targets. Most of the targets were sort of well up into the mid 40s. So we wrote some puts on it the other day. By a bit of luck, we got a really big jump the next day, but the trend or the theme of the stock was still that we felt it looked cheap in the low 40s. So I was looking for that upride back to sort of $42, $43. So that's been a really successful trade. Now, when we looked at doing that trade, we sort of based the idea of someone happy to buy about $100,000 worth of the stock. So we sold puts that would take on that sort of dollar worth of exposure, which obviously sort of 25 or 30 contracts. And we've been able to pull a pretty solid premium out of that in a relatively short amount of time. Right now, clients that did get into it are actually probably looking to exit the position because they've got profits of around 80 or 90% on the position they opened. So it makes sense to kill that while such a strong profit's in place.
Yeah, we put this recommendation out around here, I think, and I had a couple of clients just buy stock. They didn't sell the puts; they just bought the stock outright. And
Yep.
we're almost at the point when it hits that red line, which is 200-day moving average. We could almost be at the point of starting to look to sell calls over that as well. I mean, the other great thing about that stock is exposure to the American market. I think once we get tariffs, some certainty around tariffs one way or the other, you could expect interest rates to drop over there, which could trigger a bit of booming, so a bit of building to get moving on. So it's a great stock for that sort of exposure. So we're happy to hold it in the longer term.
Yeah, excellent. And just on the US economy, I was looking at some data yesterday, and the chance of US recession has actually dropped from a 60% chance to now they're calling it a 30% chance only of
Yeah,
US going into recession. So
incredible.
definitely suggesting their building sector is likely to see some strength because obviously, housing is one of those areas that does tend to lead economies out of sort of flat periods. And with Trump's tariffs, I think local builders and US internal focused policies will be very important for them.
Yeah, fantastic. I think if people wanted more information on this stuff, they can go to our website. There's plenty of resources under our research tab and under our blog. And you'll see there's a sign up there for our daily newsletter if you're interested in that as well. And if not, people can just feel to reach out to us and we can have a chat from there.
Yeah, made some great points out today. Hope the market treats you well, and we'll talk next week.
Yep, sounds good. All right, thanks, H. Talk to you again soon.
Thanks, mate. Bye.
I
All
think
good? All good,
I
mate?
think we're almost getting more polished at this, H.
Yes, I know. It's scary, isn't it?
Yeah. Right, I'll
All
get
right.
on. I'll
Well,
let you
you have
get
a
in
good one.
there.
I'll talk to you.
All right, see you later, H. Bye.
See you, mate. Bye.